what do you think about these jobs figures? Are they better than you expected?
These are a good set of numbers, better than the market expectation. We've got really strong jobs growth in February, all of it full-time, a rise in the participation rate, so that's the number of Australians engaged in the workforce, and an unemployment rate at 4%. Really good set of numbers. It does predate the floods that we've seen in Queensland and New South Wales, though.
Yes, so do you expect this strong jobs growth to continue? Because as you said, the floods will hurt the economy.
So the floods are a supply side shock to the economy. So they will have an impact in terms of people not able to get to work, businesses that perhaps didn't bring their casual workforce in. I think the most important thing for me, though, is that the underlying fundamentals of the economy remain strong. The leading indicators continue to suggest that the economy will keep creating jobs through 2022 and the unemployment rate will nudge below 4%.
What about inflation, though? Of course, that's the elephant in the room. Overnight, we saw the US Federal Reserve raise interest rates by 1/4 percentage point, and they flagged there could be 6 interest rate rises this year in the US. Of course, that will push up the global cost of borrowing, which is already going up. So how likely is it that the Reserve Bank will decide to raise interest rates in 2022?
We've already heard from Governor Lowe that a rate hike this year is plausible. Private sector economists mostly forecasting rate hikes towards the end of this year. Inflation is also rising in Australia, but it is rising slower and is lower than it is in the US. Some of that is temporary. We're just not sure how long some of these temporary supply disruptions may last. But we do think that inflation will rise. We're expecting wage growth to rise as the labour market tightens, and that will set the conditions to see the RBA follow the Fed.
But how much a risk is the war in Ukraine to the economic outlook? We did see commodity prices soaring. Some prices have come back, such as oil. But isn't that a big threat to the global economic outlook and, of course, a flow through to Australia?
There's a few moving parts for the Australian economy. As you said, on the one hand, the crisis in the Ukraine is seeing global growth forecasts revised down and inflation forecasts revised up. For Australia, we are, of course, a commodity exporter. So those higher commodity prices will deliver an income boost to Australia through commodity prices, through the mining sector and corporate tax paid. But on the other side of the scale, we've got households that are facing cost of living pressures at the petrol bowser, but more broadly across food, for example, as well.
We've got the federal budget coming up. So do you expect to see some sort of relief for households, despite the big budget deficit?
We are expecting to see some cost of living relief. It seems clear that Treasury and the government are working through a variety of options in terms of what that could look like. The economy has performed stronger than expected, so there will be an economic dividend. And as always, the question is how much is saved and how much is spent.
Now, just going back to the Federal Reserve, again, they are pricing in a number of interest rate rises this year. Do you think they're being too hawkish? Because COVID hasn't gone away, and of course we've got the war in Ukraine.
I think it's a really tough environment for policymakers at the moment, mainly because the shocks that we're getting to the economy are coming from the supply side rather than aggregate demand. And it's demand that's most clearly connected to monetary policy. Look, inflation in the US is very high. It's risen very, very rapidly. The Fed is starting off from a very expansionary base. And, you know, even when you look at the dot plots from the Fed, they're looking at getting the cash rate back to neutral next year and then contractionary beyond that. So it feels like a really tight and fast tightening cycle, but we are coming off a low base.
Okay, Jo Masters, Chief Economist at Barrenjoey Capital Partners. Thanks for joining us.